Hey guys, welcome to the Closing Beat. Happy Friday, everybody. It is official, man. That light is staying right there. That looks good, right? It ain't easy to make this looking good. That looks good. Hey, happy Friday. Welcome to the Closing Beat. This is just a quick show that we do about the stock market. We're financial advisors here, so we'll cover the stock market, all the good, the bad, and the ugly. A lot of good to cover today, of course. And, well, I hope you keep us in mind. At Jazz Wealth, you can schedule a call, chat with us if you'd like. If you want to see how we can help you with your investments and kind of what we have to offer here. I was thinking about doing an open house maybe once we get, behind this camera, there's a set, and I'm sort of building a set to look like a jazz clubs, it's like a bar and everything. And so I'm thinking about we'll do like an open house once that's done. Answer your questions if you have any. Otherwise, check us out on the website there. We're also playing a game. It's called Guess the Dow, and we have a winner today. Let's go see here. Our winner today is Juan Segura. He's already been notified, and I saw he responded already. 26572.13 was his guess on the Dow. He was off by about 1 point, as close to 1 point as you can get without being exactly 1 point. So he was the closest to guess the Dow without going over. And if you want to take a shot at the bottom right-hand corner of your page there, actually this last week there were only 118 guesses. That's the least we've ever had. And so, hey, you got a good shot there. 1 out of 118. Mr. Juan Segura is our winner. One of our clients, Mukesh, was just beat out, actually, by Juan. So second place there, but there's no second place prize, unfortunately. So that's it. We're sending out a $100 gift card to Juan. Congratulations. And you can play for tomorrow. You can play as many times as you like for each week. We only accept one submission, but you can guess each week if you like. You can guess for next Friday's close up until tomorrow around lunchtime or so. So go to the website, take a shot. You got a good chance to win $100 there. Let's talk about the stock market. You got 372 gain on the Dow, 141 on the S&P, and 110 on the NASDAQ. Nice. What happened? What's going on? Well, first of all, welcome to October, right? We talked about this on October 1st, the volatility picking up, the back and forth getting wild. And I gave the stats. I'll share them with you real quick in case you missed Friday's class, October 1st class. If you look at all of the months in the S&P and you look back every month for the entire history of the S&P 500 going back to 1928, if you look at most of the months minus February and December, so every other month minus February and December, the average range between high and low is 6.5%. If you look at February and December, they tend to be a little less, 5% about average, so the range from the high to low, meaning that wiggle that you see in the markets throughout those months is about 5%. If you look at October, that is the highest range, right? 8.25%. So between high and low, the markets tend to wiggle around about 8.25%. And so, yeah, we're living it, right? So now you understand why this is the most volatile month. You will never forget that stat until it changes, but it's going to take a while to change it because there's, 100 years worth of data there. So anyways, that's that. So what happened? The unemployment rate, right? We talked about this yesterday. We've been talking about it all week. This is going to be the big focus. How did things go? What's the unemployment rate? We were expecting 3.7. We came in at 3.5, so less than expected. It actually makes it the lowest unemployment rate since July 1969. And to prove it to you, let's prove it to you. Here we go. We'll pull up the U.S. unemployment rate here. We're at 3.5% right now. That's a downtick from last time from 3.7. We were expecting it to be unchanged, right? So we were at 3.7. We come all the way down here to 3.5. If we look as far back as we can go, you go, well, that's impressive. Unemployment just ticking down, 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 down. Where do we intersect here? You got to go all the way back to the last time we were at 3.5%. Was June of 1969, which you can see if you look up just a little bit. I'll go point over here. You want to look right in here. That's the unemployment rate. 3.5% in June, which was reported in July, so technically July there. So that's a historic low. Notice that at the end of 1969, that gray area back there, that's the recession, right? So let me just zoom in for you. I got to go back here. I'll go to 1968 real quick. There you go. So here's the last time we hit 3.5, bottom left-hand corner of your screen. At the end of that year is when we entered the 1970 to well, basically it was just an 11-month recession, but a little recession inside of that. So Is that an omen? I have to say the word recession a few times because that's a hot topic right now on YouTube. And if I want to make like $8 on this video for doing this for you guys, I got to say recession so the algorithms pick it up. Anyways, does that scare you, right? 3.5% last time we hit that down towards the recession. I'll leave it up to you. What else we had going on today was payroll growth. Not quite as expected, but we did have a slight uptick there. It was 136 versus 150,000, which was expected, but it was still growth overall. It's kind of like Tesla's numbers the other day, where they didn't hit the goal, but it was still growth, and people still give them a hard time there. What else came out today? Oh, average hourly earnings. They came in basically flat. So basically what it tells you is between average hourly earnings and the average work week also came out today. There was really no change. So people aren't working anymore. They're not getting paid anymore. And traders today were like, that's good enough, right? Needed a reason to buy the markets. It's extended in the short term. Okay, we'll take it. Not a great jobs report, but still, we'll just say good enough, right? By the way, the average hourly work week, 34.4. It didn't change. It's been like that. But who works 34.4 hours? That's a Monday for me, right? I love it. Anyways, let's dive into this stuff here. Lastly, Mr. Powell spoke today. Remember, there were 3 Fed members speaking today. Chairman Powell was the last to speak on the day, and he didn't ruin the day, right? He was very cool about what he said. Somebody coached him, right? He was really cool about what he said. He basically just said, hey, we're here to just keep the economy rolling, baby. That was like his sort of phrasing, which we don't normally see out of him. Normally, he talks and things get a little bit weak because he says things maybe he shouldn't say. So it didn't give anybody a reason to take any risk off going into the end of the the weekend here. And so because of that, you got at least a little bit of a rally back above the 50-day moving average. It did act as a bit of resistance throughout the day, but as we got into the close there, people were like, okay, I don't have anything to be scared of. Trump's pretty quiet today. All right, I guess we'll keep on the positions we have. So the stock market a little bit higher. That's the S&P 500 for you. Now, if you look at the Dow, you got the same thing right around the 50-day moving average. That's the blue line on the charts. And if you look at the NASDAQ, basically the same thing, floating around a known resistance area. I left a line there for you just in case you want to sort of pay attention and look around there. If we take a look at September here, October, in the S&P 500, the first day of October fell 1%. It was like 1.5% actually by the end of the day. That's actually happened 14 other times. So just thought it'd be cool, share with you. 14 other times, the first day of October's fallen more than 1%. It's actually about half 1%, half 2%. So there's been some really nasty first days in October. The average gain from the point of falling 1% or more in the first day of October is actually 3.75%, which is technically 2.75%. But it lets you know that for the most part, there's a gain from there. Doesn't have to be amazing, right? We've already sort of covered that here for this October. And it's been positive for the month of October 10 out of the last 14 times, which just means here is where can I zoom in? Yeah, I can. All right, so we got this right here is the beginning of October. So the average gain is 2.75% higher than this point. That basically puts us back at highs if the historical stats continue there. 10 out of the 14 times it was positive for the month, meaning it retraced all of what it lost on the very first day of October, which is this guy right here. So we'll see. I mean, you were overextended to the downside. You found a little support, although I thought it was pretty sloppy. Traders still found it as support. We're now a little bit overextended to the upside. We'll see. Maybe Monday's a quiet day, at least to start. If we don't have any kind of news or anything, we also have earnings coming up. And then Fed rate cut, which everybody's expecting at the end of the month, so we'll see what happens there. Let's go over the individual sectors if you care. We'll go through and take a look. So financials, well, first of all, every sector was higher on the day. 8 of the sectors were higher by 1% or more, so it just shows you there was a broad-based rally. Whenever somebody gives you those kind of stats, unless they're just, I don't know why you would share stats unless they meant something, but the reason why I share these things with you is so we can sort of tell how significant or serious a rally or a decline is, right? So the fact that every sector was higher today, you go, okay, broad-based rally, but was it because there was some little corner of the market that was really strong? No, actually, so because 8 out of the 11 sectors were higher on the day, you can basically say, okay, across the board, people thought it's a good day to buy. So their opinion, not mine. The markets were led today by financials and tech. We always say that in order for the markets to go higher, you need tech and you need financials. They make up the biggest chunk of the market as a pair, and so you need those to actually make their move higher, or make the market move higher. Financials were the leader today, up almost 2% on the day, back above the 50-day moving average. You could use the semiconductors if you like to take a look. Semiconductors all week, we've been saying, when the markets have been weak, these didn't really budge. Semiconductors held their own as a package, right? As a sector, they held their own. And so with any little bounce in the market, you find that relative strength. That's a great study this week. If all you want to do is speed through all the blabbering that I do and hone in on where we talked about the relative strength of the semiconductors, that's a big deal, right? As an active trader. As an investor, it's just kind of fun to look at, I guess, but no need to take it much further than that. Crude oil, positive on the day. We talked about this yesterday. A little bit of support down here. You figure it'd be higher over the next couple days. I'm not actually allowed to tell you that, but tried to give you as much as I could to say, yeah, you'd guess you'd expect it would bounce. That's great, actually, because it stops a long losing streak here. This is now, well, we had 8 days straight down, about 20% from high to low. So that's a good little pullback in oil. Basically, some people just looking at this support here today and saying, okay, it's worth a shot. Worst case, you know, you got a stop loss under there if you're playing crude oil futures and everything. So the price of oil finally took a break and gave us a little bit of a bounce there. Other than that, we could look around at all the sectors, but we're basically telling the same story. Really some interesting things maybe. Communication services off the 200-day moving average. We pointed that out yesterday. Just a little bit of continuation there. It is not free and clear for this to just take off and soar to new highs. This has a lot of congestion overhead. It's going to have a lot of resistance. Hence, I think it's going to have a lot of back and forth action in there. But it's nice to see it off the 200-day. In general, still pretty sloppy. Let's go over to some stocks that may be in the news today. We'll go through a few other things and take your questions. You've got Costco a little bit higher on the day. They beat on earnings. Revenue was a little bit of a miss there. Sales were okay overall. Biggest issue was they had to lower costs even just a little bit more to keep competitive, right? There's a little bit of a crunch going on in this space right now. So Costco had to cut some costs there, and so because of that, didn't have like a blowout earnings announcement or anything like that. But membership rates, always like to take a look at that. 90% membership renewal. That's actually a record for Costco. I don't recall it ever being higher than that. I don't have the, I didn't go back and look, but I bet you that's a record. I mean, I'm just going to assume that's a record for them. Now, if you're looking at Costco and you're thinking like, all right, that stock's trending higher, everything looks good, keep in mind this stock is not cheap, not from a price perspective, but from a valuation perspective in this case here. So in its, how would you say it? In its category, right? Because it's not really a sector. We're not looking at retail as a whole. We're looking at sort of these shopping clubs. We're looking at Walmart. We're looking at, you know, like Big Lots. We're looking at, what is it called? Price Mart, things like that. So when you start, Kroger's another one, Target, when you start comparing them in that category, extremely expensive. It is the most expensive stock in that category, at least the most overvalued relative to Walmart and Target and Price Mart and things like that. And Big Lots, if you want to put them in there, but it's Big Lots, right? It's not really a fair comparison. Anyways, the stock bouncing off the 50-day moving average, not looking too bad there. So far so good. People willing to pay a higher price for better performance. Apple, you got the stock almost moving to new highs there today. Supposedly they upped their production of the model iPhone 11. But if you dig into that story, I just happen to have nothing to do. I read through the whole story. The report out of Japan was that they raised the production of the iPhone, the new iPhone 11, by 10%, about 8 million units. The details of that story were it was on the lowest priced model. So does that mean they're not selling the premium models there? I don't know how it breaks down. I didn't follow this release of the iPhone, but the lower end products is what they were trying to boost production on there. So that was a little bit of a blemish on that one. Apple themselves declined to comment to Jazz and everybody else out there. So Apple kept quiet on this. They let the sort of rumor speak for itself out there. So it's more than likely true, because they would have come out and combated that. They're pretty quick to do that. Anytime the Nikkei news comes out with news that is not accurate, Apple's been combating that. They didn't do it today, so we'll see. Okay, HPQ, this is HP Inc. So you got some contractions out there, and I'll leave this to you guys for the comments. I'm just going to tell you what happened. So HP is restructuring, and so what they're doing is they're laying off, I think it was like 7,000 to 9,000 workers basically across the board. It was 16% of their workforce. Stock was lower by 10% on the day. They're also, they raised their dividend. I didn't catch the number, I'm sorry, but they raised their dividend there, and they're also going to buy back $5 billion worth of shares. This is where I start to develop a tiny little bit of opinion here, because the fact that you got low rates, you've got everybody doing really well, and you have HP saying, look, rather than invest in ourselves, our employees, and pay people more, we're just going to like cut workforce here, buy back a bunch of shares, and regroup as a smaller company. I don't know, man. That's kind of frustrating, right? That lends a little credit to the argument of people, some of the government officials wanting to stop corporate buybacks because they're not spending the money on the people. They're spending money buying back shares. So this is one example maybe where they, I'm not leaning one way or the other. I'm just saying that's a little frustrating to read that out of HP. But they got to do what they got to do. I mean, they're answering to shareholders at the end of the day. Also, you got a lot of other news about layoffs. You got Kroger. Kroger laying off a ton of middle management. So that's a rumor at the moment, but they didn't say it wasn't true. So they're working on that there. Also, WeWork is laying off a bunch of people as well and cutting all unnecessary costs. So what I tell you, they're doing just like Uber did. They're doing the exact same thing. New management's taken over. Before he goes on TV and tries to show how much of a nice guy he is, he's going to go and cut a bunch of costs. So he's got some positive news to report. Let that news build, the snowball positive action around WeWork. They go public. Everything's fine, just like Uber was. Well, fine with quotes, I guess. Anyways, let's move on. Enough of my little whatever you call it there. Five Below. So Five Below up 2.2% today. I was thinking about starting a little category in our class or our show here for upgrades and downgrades. I generally just pick one or two that are kind of popular names that we all know of. But I was thinking about making it a category. Five Below was upgraded at William Blair. The basics of their story was we're upgrading the stock because, well, it's just a cool place, right? Kids have fun shopping there. Parents have fun shopping there. Lots of bright colors. I'm not kidding. That's basically the analyst's sort of comments there. Anyways, I didn't really look much further into it than that because it just seemed like sort of a general get your foot in the door kind of an upgrade. There are 9 buys, 4 holds, and there are no sell recommendations on Five Below. Average price target is 140.73. I believe that's about 9% higher than where we're at the moment. The analyst that made that recommendation, he's no joke, by the way. He's 63% accurate with a 13% average gain, so I'm not discounting him at all. I'm just saying, really? Give me something else, man. Give me some details. Etsy, there you go. Also higher on the day, 1.1%. Nomura called this, they upgraded the stock. They said their pricing strategy, they liked it, right? Squeezing extra dollars out of people on the site, and they're not no joke, really. I mean, that's some premium stuff there if you're, making custom-made things. I've looked on there for some stuff for the bar, and very nice. There's a lot of people making money there. There are 10 buys, 1 hold, and no sells on the Etsy right now, so everybody bullish. 74.36 is the average price target, which you can see the chart. 74.36 puts you at new highs. So the average estimate there is that this stock's going to do really well over the next 12 months. That is their approach, not mine. Snapchat was a little bit higher on the day. Facebook came out yesterday or the day before, and they said we're competing with Snapchat. Basically ripped them off for Instagram. They got the same sort of thing going on there. Morgan Stanley upgraded them today, and so the stock was a little bit higher. They said, look, these guys are getting better at spending money, right? They're improving how they manage their operating expenses, is the fancy way to say it. And they like their improved discipline on how they're operating their business. So stock got a little bit of a bounce today. It was also a little oversold, so take it for what it's worth on the day. That's what you have. 49% of the stocks in the S&P 500 were high above the 50-day moving average today. That's quite a jump, right? That's 12% higher than yesterday. So remember, if you see it, it's just because there's a lot of stocks right around the 50-day moving average. Not a big deal too much. There were 17 new 52-week highs today. All of them finished in the green, as you might expect. There were 6 REITs, 4 utilities. So there you go. That takes care of 10 of them. Out of the other 7, you got Pepsi hitting new highs. Just a lot of that earnings excitement still blowing over, from the other day. So Pepsi looking good, and you had Dollar Tree after kind of consolidating for a while and letting the moving average catch up. Now you have excitement there. Remember we talked about this probably 2.5 weeks ago, saying, look, this is moving into highs. It's hinting at breaking out, but it's already a little extended, and so you don't get a massive breakout once the stock's already expended a lot of its energy. And so this is a great lesson there to kind of, follow up on, and I try to point these things out as they go, whether they work or not. I just like to point them out. So after this has taken a little bit of a break, now you have people willing to use new energy to buy the stock as it breaks above the highs there. So I thought that was cool. The retailer, what do you call them? Not retailers. Your brokerage firms recovered a little bit today. 2% higher on E-Trade, Ameritrade. a little bit higher as well after just being decimated there. I mean, horrible week that they surely won't forget about for a while, but they did it. Schwab higher by 1% as well, so a little bit of a sort of a overextended, oversold rally, at least in the short term there for those stocks. AMD, that's one of our stats plays there. It's got one more day to go. Not bad. I mean, it doesn't, you know, it doesn't look great at the moment, but all it's got to do is make it up there for the stats to be accurate, which would require this to be a pretty positive day on Monday. We're going to need at least 1.79% on Monday. So we'll see what happens there. That's the stats play. I got one more for you if you got a minute. Lennar. We looked at this one over the last few days now. We've been talking about how this is just a little bit extended here in the short term. And so we looked up the stats on that. When it finds its way as extended as it is in history, 66.6% of the time. I don't know if you think that's good or bad news there, the fact that it's 666, but 66.6% of the time, it is lower by basically 1%, 0.98% in the next 5 days. That's basically saying that you put the stock, you basically erase all of what happened today. Right? So that's going to be right there. We'll just draw a little line, see what happens. Oops. There you go. Just for fun, we'll see what happens there. So that is Lennar, a little extended in the short term if you like following through with that kind of stuff. All right, what else do we have here? Let me get out of your way and take your questions. Actually, there was a UBS analyst that was asked about all this sort of price wars and things like that. Actually, the joys of remote control. So there's a UBS analyst that was asked about the price war, cutting every commission from TD Ameritrade to Schwab and so on. And the UBS analyst quote, this is his quote, not mine. You know where I stand on this. The UBS analyst says, aside from a slick interface for unsophisticated investors, there's not much benefit at all to using Robinhood now instead of using TD Ameritrade, for example. Wow, that was just a more elegant way of saying what I said the other day. He went right for it, man. You get where I'm coming from on that. So hopefully we don't need to cover that again, but sort of sad about these commissions. Now, granted, if you're on some of these platforms, you still have to pay the options contracts, right? You're paying 65 cents on TD Ameritrade to trade option contracts, so you're not getting away from that. I'm actually okay with that. They put a lot of money into the option side of their platform, so I'm all for paying. I don't know, like, why everybody wants everything for free. Cedar Fairs, by the way. We talked about this. Cedar Point I went there riding roller coasters, all that, lifelong dream. Got to do it with my daughter. And Six Flags offered to buy the entire package of their parks, Carowinds, Cedar Point, etc. And Cedar Point came out today and said, nope, no thanks. Thanks for the offer. See ya. Get out of our park. I thought that was interesting. And on a sad note, Envestnet, the CEO of Envestnet, the ticker symbol is ENV. Not a stock I talk about a lot, but they are one of the how do you say it? What you don't see, all behind the scenes here, they're one of the data drivers behind that. They lost their CEO and his family in a car crash. They were in a cab, actually, and someone was going down the wrong side of the road. So on a sad note there, you don't like to hear that, but just a company that we use. So I just pointed out, not really a stock that we talk about, not really an active stock at all, but kind of sad to see that. Other than that, next week you have still a lot of econ news coming out. So we're not just going to walk away from all this volatility just yet. From here, I'll take your questions, see if you have any, and we'll let you get on with your weekend there. Other free brokers before Robinhood? Yeah, I mean, it's what it is. You sitting there waiting for Fidelity? Yeah, it was kind of interesting. Fidelity and Vanguard, I haven't noticed them jump on any of the bandwagon yet, but I don't know, maybe they're working on it. It's a bigger company, right? So can you imagine, like, it's easy to just make a TV commercial or an ad on Facebook that says, now zero commissions, but you got to program that into everything, make sure it's working right and everything. Yeah, I can imagine it might take them a little time. If they do it, I don't know. I do like the fractional shares myself here. We use fractional shares for our customers here at Jazz Wealth, and that's a huge benefit, right? Because they can participate in our entire portfolio. Our dividend fund got 100 stocks in it, right? And so we're able to be that diverse because of the fractional shares. And people, they get started, they want to test us out, they start with a smaller account. It's a big advantage because we get to see performance from day one. And I don't have to say, well, it's because you didn't have 5 of these stocks. No, you're in the whole thing. I love it. He might have the algorithm on strings there. I saw what he said earlier. You just like to buy on the lows. That's important to you in a fractional. Yeah, it likes to buy a little discount there. I don't blame you. What do you think about buying a royalty trust to generate cash in order to buy other investments? What type of account are you looking at? Yeah. Can I change Guess the Dow to another index because the Dow is so old it's not relevant. It's an unweighted garbage index. Yeah, but it's a big number, and it's easy to say Guess the Dow. We thought about this, and I'm like, is it Guess the NASDAQ? Is it Guess the S&P? I'd rather do the S&P, but Guess the Dow is just like, okay, everybody sees that number, whether you're driving in your car and they report the number to you. Just an easier one for us to use. Yeah, you notice I don't talk about the Dow much. You're right. I mean, it's from a management perspective, S&P is where everybody looks. Oh, Bob's got a point there. Vanguard might not lower their commissions because they don't want you trading more. Yeah, that's how Scottrade used to be back in the day. They used to, it was, what was it, $7 a trade, and when you would place a trade, on the window of placing the trade, it would say Scottrade does not condone active trading. They didn't want you messing around. They weren't even willing to negotiate on trades or anything. I thought that was interesting. That's their position. Now TD Ameritrade owns Scottrade, so a little different story there. You see that whenever the stock market really drops, the next day it goes up. When I hear the news the day it drops, I feel like it'll never go up again. Is it good to invest when it falls? So Mark, if you think about it, every day for the rest of your life, the market's either going to be up or down. It is extremely rare that it finishes no gain, no loss for the day, right? So if you think about it, I mean, it's a crapshoot, right? One day it's up, one day it's down. If you want to respond to one day-to-day type action like that, well, you're a trader. You're just someone that's going to keep in touch with the day-to-day action. You want to play for the little small inefficiencies in the market and everything, and that's okay. There's a place for that. Based on you suggesting your emotions when you were talking about feeling like the market will never go up again, I'm assuming you're not an active trader. And so because of that, the day-to-day doesn't matter. What you're really doing, and ideally what you should do, let me go over here. If anybody is a longer-term investor and you're scared about the day-to-day, you pull up whatever chart you look at, whether, I don't know, Robinhood or whatever you want to look at, and just change it to weekly. Change it so that it only shows you the weekly performance on the screen, however you want to look at it. And that way, when you see dips, you realize that it's a part of a bigger move rather than just the day-to-day sort of excitement or whatever the news is. That might help you a little bit. Yep. Sorry if I missed any questions there. If a company like Facebook was broke up, what's the possible scenario? Oh, I have no idea. I don't have to finish the question. I have no idea. I won't even pretend to know. Yep. Well, the account type's going to be interesting there for your question earlier, right? Because of taxes. Active traders, yeah, they're not messing with Vanguard. Yeah. Do you think you'll see more brokers starting offer accounts that let you set percentage allocations and use fractional shares? That's what we do here. Yeah, you know what we do here. Do I think you'll see that? No, I don't, right? Because the bigger companies, they, like the robo type thing where Schwab says, come join us and we'll manage your portfolio or whatever. Well, it's all automated. And so all that's already been pre-planned for you. You just basically say aggressive or, not aggressive or whatever it is. And so that's all been automated. I don't think there's a need to build a platform for the retail consumer where they get to choose the same thing. You know what I mean? I don't think, and now they would say, why would we spend the money, the millions of dollars to build that and then give it away for free if we can't make any money? Even if we make a few dollars off the order flow and everything, there's no point for them to do it. So the fact that commissions are gone to me just means we no longer get interesting, cool things unless you're in the super active trading world. Yeah. Can you do a video comparing the return on real estate investing, rental income? There's a lot of variables there. So I did one that I get some people didn't like. I understand that. I didn't fight back on the comments because we talked about the investing in the market versus the appreciation on homes. Those are tough, right? Because there's a lot of regional variables there. And so that's a very, very tough one. We'd have to make a lot of assumptions. And so I think it's hard to do as a general video. As an individual, like if you have property and things like that, and we can zoom into your area, your returns, your costs and expenses, oh, that'd be cool. Yeah, no problem there. No class. Oh, last night. No class last night. It was my daughter's birthday, actually. So took the Thursday off. Yep, portfolio update is next week. If you ever want to see what classes are coming up, it's always on the website. It's public under events. So you can always see, if you want to come by, or if you're something you're just like, nah, doesn't interest me. Or if you just want to stay tuned for the portfolio updates, that'll actually be next week. Yep, already booked. And we'll do a few other questions here, see what you think. Good time to buy into Alibaba. It depends on what your goal is. If it's a short-term trading, you have some options there. If it's long-term investing, I mean, you're basically moving sideways. So you're making an awfully big bet that you think it's going to break above all those areas that it's had problems with there in the sort of short term. You're betting over 180 is going to be just a breeze to get through when it's really struggled there before. Yeah. Yep. Cool. Oh, thanks. Yeah, she turned 19. Crazy. Your thoughts on if it's possible to do day trading for a living by quitting your job? Asking for a friend. I love that. I love that one. Can you do it? Yeah, I actually know a lot of people. I know there's a guy on the other coast there who's unbelievably wealthy, and he trades one stock every single day. And when he walks through the grocery store, you'd never guess that's what he does. Just a total normal dude, hangs back, lives in an almost $12 million house, probably more than that by now. Gorgeous place, and you absolutely can. You don't have to do it to be like uber rich, of course. There's a guy in my old neighborhood. He's a day trader and does well. I mean, he's not very active with it. He just does it here and there, but can you do it for a living? Yes, I've seen many people do it. I've seen everyone fail who thinks it's as easy as just buying and selling. If you decide you want to be some kind of an active trader, realize that, to me, that's the equivalent of being a doctor, right? You don't just flip a switch and become a doctor. And I don't mean to put everything on a pedestal or anything, but it is that difficult, right? You can't just dive in 10% and say, all right, I'm going to start trading, let's go. You're going to get run over. I've watched a ton of egotistical, very confident people think that they were just somehow going to beat traders all over the world and traders on the exchanges and big hedge funds and stuff. Somehow they were going to do better all of a sudden without doing a lot of research and learning a lot. So if you're willing to put the effort in, you absolutely can. Yeah. I've seen people that probably shouldn't be good at it eventually develop the skill and that sort of sense of how things move. Yeah, I definitely can. Good old plunge protection team, yeah. That'd be my retirement gig. I'll apply for that. What a cool job. If they're real people anymore, huh? Ooh. Last couple questions here. Good time to sell PG? Well, I mean, you have people there that are willing to buy that stock hand over fist. If you don't offer it to them to sell, then they won't have any shares to buy, would they? There always has to be a seller for a buyer. And if there's a lot of buyers, they're going to need somebody to sell their shares to them. So, I think Netflix is tough. You're asking for a lot of volatility. So if it's just an addition to a large portfolio or something, okay, it's not going to really kill you. But as a single stock pick, you're asking for a lot of headline risk, a lot of volatility there with all the other competition out there. So it's a tough one. Do they have college classes on trading? No, sadly they don't. You basically got to dive in, just get to work. The biggest problem I see is actually people that will look on a YouTube or they'll look to a class or something where people teach you a strategy. If you're learning how to trade, you don't want a strategy. You want to learn how it all works, right? Then you can develop strategies because you're essentially betting on whoever you paid a lot of money to teach you how to trade that their strategy is good. First, learn how everything works. Open up a demo account, click on something, and then go, what in the world did I just click on, right? Click on something else, then call them up and say, hey, what's that mean? Then click on something else, place an order, mess it all up, call them up and go, what'd I just do? And just beat it to death like that. That's really where I would start. Yep. Thanks, Ryan. Appreciate that there. He's spot on, by the way. Hey, enjoy the rest of your weekend. If I helped you in some way today, maybe hit the subscribe button, but it's back to work for me for now. Enjoy. We'll be back on Monday to do this all over again, and if we can help you in any way, with what we do here at Jazz Wealth, check out our website. Otherwise, do me a favor, hit the subscribe button or the thumbs up button or something. There's so many things I got to ask you to do. Just have a good weekend.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.